What's going on, guys? In this video today, we're going to go over how to make a trading plan. If you haven't seen the video I made on how to choose a stock, check that one out after this video because it's going to go well with this video. In the meanwhile, I'm going to go over some things that I think are very important to mitigate risk in the markets. So before I got into stocks, everybody I knew was pretty much saying, hey, don't really get into stocks, they're risky. So I focused on how can I mitigate risk? How can I make this less risky? And there's a few things that I did. I focused on budgeting my money, and I focused on the psychology it took to participate in the markets. So I budgeted my money because I never wanted to be using money that I needed for paying bills or using money that I wanted for my savings. I wanted the money that I used for the markets specifically for the markets. So I budgeted my money that way. That helped me significantly because it saves the mental stress of, I need to take money out of this account and I need to put it to pay this bill. Nah. It takes away all that stress. I have my money in my accounts and they stay there. Another thing I focused on is overall psychology, because at first you start and you want to make money, of course, right? But sometimes stocks aren't always going to go up. So I try to be as open-minded as possible that anything could happen. This stock could potentially go down 30%, 40%, 50%, who knows, right? I just try to be as open-minded as possible, and I'm always trying to learn from mistakes I make or learning more information on the about the market, about a stock, about technical analysis. I'm always trying to learn as much as I can because I think it's important to always strive to get better at this stuff. So that's like my overall psychology of the market. That's how I'm trying to think of it. Like anything could happen and try to take from every situation as a learning lesson. Those are the things that I'm thinking about before I put my money in the market. Now, when it comes to actually putting my money in the market, before I do it, I ask myself this first thing. Is this going to be an investment or is this going to be a trade? Right off the hop, this is going to make things so much easier when it comes to selling down the road when I have profits or how long I'm going to trade it. If I choose that it's going to be an investment, I'm likely going to hold it for a very long time, and I'm thinking of building a large position. I'm thinking of reaping the benefits of dividends. I'm thinking of buying dips. So when it's an investment, it's a different psychology and a different mindset than a trade. If I'm investing, I'm thinking of long term. If it's a trade, it's going to be short term. For example, you get into an investment. You say, I want to invest, right? So you get into the market, and within 3 days, stock XYZ that you chose went down 30%. So you get out of the market, and then within another 2 days, it's back up to where it was or it's higher. Well, the thing is, why'd you get out of the market? You chose that it was going to be an investment. So that's something you want to decide before you get into the market. That's going to make things so much easier. So now that we've decided those are the two situations we could choose, how can we plan for either of them? For example, if this is an investment, you need to ask yourself questions like, is this company going to be worth more in the future? Why is it going to be worth more? Well, do they have certain products coming out, right? Is their revenue continuously growing year after year? Do they have amazing chart patterns and it's a continuous uptrend? You could ask, do they pay good dividends? You could ask so many different questions, right? What's its overall impact on the economy? What's its overall impact in its specific market? Is it the overall market leader? There's so many different questions that you want to ask before you choose a specific stock to invest in. So that's what I would be thinking about if I want to invest in a stock. Now, if I'm trading, there's still some questions you want to ask. They just might be different mindset around them. Like you might want to be asking, how long am I going to be in this trade for? Where do I want to take profits from? Where is a good spot for me to buy? What's the risk to reward ratio? How much of my account am I willing to risk? How much do I want to lose on this specific trade? Where am I going to exit if I'm right or if I'm wrong? There's a bunch of these questions that you want to ask yourself before you want to get into a specific stock. Yeah, I know it sounds like it's a lot, but the thing is, by asking yourself and going over these questions before you get into a stock, you're now honing in to a specific set of parameters that you need to be true before you get into a stock. So I'm going to go over different scenarios of stocks that I choose to invest in and then stocks that I choose to trade, and the mindset I'm thinking of before I get into each specific stock. Alrighty, so here we have some of the stocks that I'm investing in or looking at investing in my RRSP. So I'm looking at Apple, a gold ETF, Visa, and Caterpillar. Now, I'm invested in these stocks because, one, I think overall they're obviously going to be worth more in the future. That's what I believe. That's why I'm investing in them. But they also pay dividends, and I really like their impact in their specific market. So, for example, Visa, in my opinion, as we go into the future, I think we're going to use less and less cash. Visa is a credit company. Like, it's never going to go away. Like, I honestly think it's a great investment. I think it's potentially going to be in the 400s in 3-4 years from now. So that's why I'm investing in it. Caterpillar, this company is one of the manufacturers of machinery. So they make like farming, construction machinery, things like that. That's never going to go away. They also are one of the leaders in the world of like autonomous vehicles and machinery. So that's a crazy bullish fundamental catalyst that a stock or a company could have. Like, that's a great reason why I want to invest in it. They also pay great dividends. Sign me up. Like, now what my goal is I want to build positions in these companies. So whenever I get X amount of money on a paycheck, I'll add it to my RSP and I'll build up money in my RSP until I want to add to any specific position. Now, the cool thing that you get to do with this is I get to choose now. For example, this cat position. When I look at the chart, it could be getting too extended, right? Do I want to add on this one right now? Maybe I won't add like all my cash. But when I look at Visa, see, now it's in a great area on the chart of where I want to buy. So I could maybe think of adding to that one when I have a good amount of cash to add. That's the psychology and how I'm trading in my RSP. But if I want to make a specific trade, it's going to be a little bit different. So we're going to go to Fastly and we're going to go over a few different examples of how we could trade Fastly. Okay. So say I want to place a swing trade on Fastly. I like the chart right now. Well, why do I like the chart? So I feel like we are getting in a zone where we've got some demand here. So I'm thinking we could get some buying pressure coming in and it could raise prices to get higher. Well, where could we potentially go now? Now, the chart has been all the way up to $130. So there's potential for it to go up there, but there's also potential for it to go down. So I need to know where I'm going to exit if I'm wrong, where I want to take profits, and how much money I want to put in, percentage that I could potentially lose, all this stuff. So let's figure it out. So I like to use this tool because it helps. You put it on where you think you could potentially get in. Right now we're looking at the chart. It was at 16.16. So if we mark it at 16.16 around there, let's say I want to make my max loss around this area, 10%, because that's the furthest I want it to go down. There was some buyers down there. So I think that if it potentially goes down there, there should be buyers before I get stopped out. I'm going to risk 10%. But where am I going to take profits? Well, there's obviously some resistance at this point on the chart right now because we got stuffed 1, 2, 3, 4, 5, like 6 times in this range. So maybe I could mark it off right here. This is where I want to take profits, number 1. So maybe I'll take 30%, 50% of my position. I don't know. Maybe depends how much money you use, right? Because that's almost 20% right up until there. So say you put in $5,000. You take off 20% of the trade, which is $1,000 when you get to here, and you let the rest ride because you think it's going to go all the way up to $120. That's a great trading idea. That's a plan. Your plan is you're going to risk 10% of your money for this trade, the opportunity to potentially go upwards of 82%. I think that's a great idea. Now what you need to look at is like, maybe is there like a chart pattern? So our chart pattern right now is this demand zone. We're buying off a demand zone. Now we're looking at the specific candlestick that are at this range. We're seeing wicks coming from the bottom, which is good. It's telling us it's rejecting lower prices. It's not a guarantee. That's the reason why we have this plan, that we're going to get out if we're wrong. That's very important to understand. So that's more like of a swing trade, right? This is on the daily time frame. This is going to take some time to develop. So this might be a few weeks to play out. Who knows? Maybe even a couple months, right? This is a play you could add to your RSP if you're planning on holding it all the way up to 120. So things like this, or in your TFSA, right? You could add it there too. So these are some things you want to ask. So think of what time frame you're using. You're using the daily time frame. Where's the potential price target? Well, the potential price target is $78, and then you're going to let the rest ride after you take some percentage off to treat yourself to some gains. Okay, nice. We established what is the bull case and what is the bear case, right? The bear case is that it's going to continue going down and we want our stop there. The bull case is that it's going to run up, hit some resistance, and if it continues to go, we have some gaps to fill in the from the past. Like, there's a pretty good bull case there. How much of my account am I willing to lose? So that's a question you have to ask yourself, right? You put the parameters here where there's a 10% loss and a potential 20% to 82% gain. How much money are you willing to lose on that 10%? Because that's what you should be thinking about. It could very well go against you. On that 10%, how much are you willing to lose? Is it going to be $100? Is it going to be $500? Is it going to be $1,000? You have to decide that for yourself. What is the size of money you're willing to lose on any specific trade? Now, by doing this, it's going to help you. Like, now if you get in, you could literally set it and forget it. Set your stop in and just forget about it if it happens, set a notification. It hit $78. Oh, I got the notification. Now I'm going to take off the 20%, right? These are some things you need to think of and incorporate into your strategies when you're trading and investing to like mitigate the risk and help give you like a better chance of making money in the market. Alrighty, so say we want to make a day trade. Well, what you want to think of is the same amount of things. You ask yourself the same questions. How much money do I want to risk? Where am I going to exit if I'm wrong? Where do I want to enter the trade? Things like that, right? It's the same thing, except the time frames have changed. It's now on a 30-minute time frame, whereas on Fastly, on the swing trade, it's on a daily time frame. You're letting that develop over days and weeks. With a 30-minute time frame, there's potential that it could play out within that same day, right? So on this example, this is what I have set up. I have a potential take profit area if we enter the trade in two specific areas, because we could open up bullish and we could enter at the bull break of the triangle, or we could open up bearish and we come down and we test somewhere at the bottom of this triangle, right? We could enter in one of these two areas because we think it's going to go up. If so, we risk around a minimum of 1% if it opens up bearish, 1.5%, because we'll have our stop at March 25th lows. And then if we get in at the open, we'll risk 2.6%. Either way, it's around like a 2.5 to 1 trade, or if you, depending on where you get in, anywhere in this range, it's like a 2-3 to 1 trade, right? Like, that's a good opportunity for a day trade if price continuously pushes up, right? We have our stop where we're going to exit if we're wrong. Or if we're wrong, it's somewhere in that 2% range. You want to have these ideas kind of like maybe even write them down or place them on the chart. Use the text tool and write on your chart, this is where I want to take profits. You can enter that there. Or you could even enter on the chart, I entered at 26.70. My first target is at $27. This is how you make a trading plan. Now, it seems like it's a lot and it seems like it might be overwhelming, but honestly, this is how I've become more successful, is because I create rules, I follow them, and I create plans. Because if I go in there just thinking, hey, this stock's going to go up, well, if it doesn't go up, you get smoked. And then what happens is you go, oh, I'm just going to hold it. It'll eventually go higher. And then what happens is it doesn't go higher, right? We got to be open-minded enough to think, well, what happens if it doesn't, right? Because who knows what's going to happen in the market. So the best way to prepare yourself and mitigate risk is to make a plan. So I hope that video helped. If you learned something from the video, give it a thumbs up, subscribe, or share it. Anything to help grow the account. So I appreciate it. Cheers, guys. Have a good week.